Hi, I'm Jenny Lesko-Hare, and this is the Rental Quarterly Economic Outlook, bringing you the latest news and updates on the rental and construction markets. 2013 is shaping up to be a very good year for the U.S. equipment rental industry, with rental of construction equipment projected to surpass $32 billion, followed by a double-digit rate of increase into next year and beyond.
Recent data indicate that 52% of all new machines sold are going into the rental channel. In fact, as rental companies try to keep up with increasing demand, most are reporting they'll continue adding to their fleets in 2013. This increasing demand for rental equipment has at least two driving factors. On the one hand, the economic uncertainty of the past several years has forced contractors to become more shrewd in their means of acquiring equipment. Many have made a permanent shift toward renting as an effective way of conserving cash. On the other hand, growing demand stems from construction activity that's finally heating up in a meaningful way, particularly in the housing sector. Single-family starts are now 70% above their pre-recession trough, and the National Association of Home Builders forecast projects a 19% increase in total housing starts for 2013. To put this in perspective, housing starts' annual pace grew 9.4% just in the last quarter of 2012. There were 954,000 starts in December, the highest level since June of 2008. Permits likewise rose to 903,000 in December, the highest since the same period, 2008. Within the overall housing market, the multifamily sector has led the way in the recovery and will continue to do so over the next several years. The multifamily market has recovered substantially since the end of 2010 and now stands at about 70% of the way back to a sustainable level. One of the ingredients that has been sorely lacking in our economic recovery to date has been confidence. Very encouraging are current reports that builders' confidence in the market for newly built single-family homes rose for an 8th consecutive month in December and is the highest it's been since April of 2006. Construction employment is typically a reliable predictor of future growth in the rental market and is now showing solid signs of improvement. Employment expanded in half of the nation last year and in 2/3 of all states in December. According to results of a survey by Associated General Contractors, significantly more construction firms are planning to add new staff than plan to cut staff, while demand for many types of private sector construction projects should increase this year. With demand increasing, rental companies and construction firms alike are moving to replace aging equipment fleets, so the construction equipment market is seeing a resurgence. Forecasts indicate ongoing growth in U.S. equipment sales, with wheel loaders, backhoe loaders, and rubber track loaders leading the charge. Overall, growth of equipment sales in 2013 is expected to be approximately 5.4% compared with 2012. Global demand for construction equipment is expected to continue its upward momentum as well. A recent report predicts the market to reach $192.3 billion by 2017, up from $143.6 billion in 2012. Continued economic expansion in Asia and South America will push global demand to heightened levels over the next 5-year period. Construction equipment manufacturers are currently addressing this demand utilizing their existing production capacity and workforce where possible. But as orders continue to grow, it will be increasingly difficult for manufacturers and their suppliers to keep pace. Expect lead times for equipment orders to lengthen, potentially hindering manufacturers' ability to get new equipment to dealers and rental outlets in a timely manner. Costs for equipment will also migrate upward, stemming from the expanding demand, the introduction of more advanced technology, including Tier 4 final solutions, and rising steel, rubber, fuel, and other material prices. Challenges aside, there is much to be optimistic about in today's rental and construction markets. Thank you for watching the Rental Quarterly Economic Outlook, brought to you by Rental and Cygnus Business Media. Please let me know what you'd like to hear about in these regular rental industry updates in the comment box below.